my viewers, I welcome you to Impact Analysis of Changes in Company Income Tax Act 2021 in accordance with Finance Act 2021. Number 1, FRS is to assess the profit of foreign digital companies to company income tax. So non-resident suppliers of digital services with SEP, otherwise known as significant economic presence in Nigeria, shall have their profits they hand from Nigeria subject to company income taxes henceforth. Number 2, FRS power to assess the foreign digital companies to company income tax on the basis of turnover. So just as it applies to other companies where, in the opinion of FRS, the assessable profits are lesser than expected or its true position cannot be ascertained, a fair and a reasonable rate in quotes shall be applied on the turnover to compete for the income tax due. So far, the rate that is fair and reasonable is discretionary and not clearly provided for in any tax law. Government must provide clarity on the rate to be adopted henceforth. Number 3, taxation of insurance companies. Now, FA 2021 has given us clear definitions and basis upon which to compute taxable profit for both life and general insurance businesses, respectively. And insurance companies are now required to submit a copy of actuarial valuation report or certificate to FRS within 3 months after it has taken place. Then they are also to include in the annual returns to FRS details of the insurance agents, loss adjusters, and insurance brokers, duration of employment and payment made for services rendered for the period covered by the tax returns. This is just a way of closing the gap where insurance companies would not disclose, certain transactions they have through their other partners like adjusters and insurance brokers. Number 4, companies that provide educational services shall henceforth be liable to CIT, that is company income tax. Educational institutes that are set up as NGO or not for sale will clearly plow back any surplus for promotional purposes shall be excepted from company income taxes. At the rate applicable depending whether the company is classified as small, medium or large company. Small companies shall pay 0 tax, medium at the rate of 20%, while the large companies pays at the rate of 30%. Number 5, withdrawal of tax exemption on export profits of upstream, midstream, and downstream petroleum companies. Prior to Finance Act 2021, Company Income Tax Act (CITA) generally exempted profits generated by Nigerian companies on goods exported from Nigeria if the export proceeds are reinvested to purchase raw materials and equipment and spare parts. Now, in order to align with the provisions of PIA 2021, that is Petroleum Industry Act, which brought taxation of companies operating upstream, midstream, and downstream from petroleum profit tax under CITA, it is now required that such companies' profit made from exports be excluded from the general exemptions. Now, 6, restrictions on application of capital allowance reliefs. 1A, only capital allowance on assets that was used to generate an accessible profit shall be allowed as deduction when computing for income tax. 1B, where capital expenditure is incurred to generate both taxable and non-taxable income, and the non-taxable income is greater than 20% of total income, the capital allowances shall be prorated accordingly. So where the ratio of non-taxable income frequently falls slightly below and rises slightly above 20%, so much complexity shall be experienced in the company income tax computations. Hence, the need for FRS to provide the direction in this regard. 1C, the accessible profit of small and medium companies must be matched against the capital allowances on qualifying assets for the year. Any unabsorbed allowances shall be carried into the future. Ideally, a small company that is exempted from payment of tax should not be allowed to carry forward tax assets of capital allowance to the future. Hence, the need for these amendments. 1D, the provisions of subsection 1A to 1C shall not apply to a company that enjoys pioneer status under the Industrial Development Act, otherwise known as income tax reliefs. So number 7, reduction in minimum tax rate. The reduction of the minimum tax rate from 0.5% to 0.25% of turnover, less frank investment income, will apply to any 2 consecutive accounting periods between 1 January 2019 and 31 December 2021 as may be chosen by the taxpayer. So this is a fair way to close the lacuna created by the inadvertent drafting error as contained FA 2020. However, the exemption will only be granted where the relevant returns were filed before the filing due dates. 8. Withdrawal of gas utilization incentives. So gas utilization incentives will no longer be available to companies that are formed out of another company that has already enjoyed the incentives. These amendments will prevent instances of abuse of the tax incentive schemes. So somebody may want to ask, what is the tax incentive schemes available to companies that deal in gas and downstream? So for companies who operate in the downstream sector and deal in gas, they are ordinarily entitled to 5 years tax-free period. They have initial 3 years and possible 2 years after a satisfactory performance. So let's go to the 91. Penalty for a company who wrongly filed for minimum tax to save costs rather than true position. So if the company henceforth wrongly filed for minimum tax when it is different from the true position, it shall be liable to a penalty in equal sum of the amount the company attempted to save. So this sanction will discourage companies from filing correct reports. Number 10. Withholding tax as final tax on interest paid to a unit trust. So the withholding tax deducted from interest paid to unit trust shall constitute the final tax on that income. This is a relief on tax burden of 30% tax being paid on interest earned by the unit trust prior to these amendments. 11. Undisputed assessment, that is tax charged by any assessment which is not or has not been the subject of an objection or appeal by the company or taxpayer, are now payable within 30 days after the notice of the assessment has been served. It used to be previously 60 days, but now it's 30 days. So that's the end of my presentation on the changes in Company Income Tax Act in accordance with Finance Act 2021. My name is Olapo Bamidele. I'm the managing partner of a foremost tax consultancy firm in Ikeja, Lagos, Nigeria. So if you require some assistance or help or further clarification, so look at the number and the email on the screen and reach out to us. We'll be glad to provide some help. So until we see again, bye for now.